Take a look at shares of Oscar Health, open for trade not that long ago, and that's a sight you don't see every day. Leslie Picker joining us now, been making some calls, down 9%. What are you hearing?
Yeah, you're right. You don't see this every day. It's pretty rare. Minority of IPOs do trade lower on their first day of trading, but it's especially rare when you have a deal like this one that had priced above a boosted range and increased the number of shares it planned to offer to investors, that it sold to investors, known as an upsized deal. You can see they're down 9% right now. What happens? It's a little bit tricky to tell at this point in time. For one, it's not the best market backdrop for pricing an IPO, especially a growth IPO like this one that you've seen. This is clearly an indication that the banks have gotten a little too aggressive here in terms of pricing and assessing the demand from the buy side for this deal. But you also, it's difficult because they're kind of coming out at a period after this black box of IPOs. If you recall, we haven't really seen much in the way of operating company IPOs in the last few weeks. That's because companies that are going public don't usually like to go, mid-end of February because they've got their financials that are a bit stale. They'd rather go when those financials are newer. So we haven't really seen operating companies go public, which can also make pricing and demand a little bit trickier if you're the first one out of the gate, Scott.
They should have just done a SPAC deal, right? IPOs are so 2019 at this point.